Hello class and welcome to our 12th lecture series on financial accounting or principles of accounting, and I'm your instructor Jamal Haider. So today we are starting the accounting for plant assets, natural resources and intangible. So today we will be finishing how to account for or how the accounting for plant machinery or the fixed asset, basically how we are going to account for. So natural resources are our fixed assets. Why? Because its usage is for more than 1 year. Similarly, the plant assets, so like our plant, our building, our land, their useful life is more than 1 year, so they are categorized under fixed asset. Similarly with the intangibles, so those assets which we cannot see physically or that are in the form of paper, we call those intangible assets. For example, patents, right? Goodwills. So these kind of stuff, we call them intangible. First, we will talk about how we are going to account for the plant assets. So here we go. So the natural order of plant assets are, because they are fixed assets. So under the plant assets, we have land, building, furniture, and land improvements. So we'll talk about what is land improvements. If we talk about land, if we talk about the land, then what is land improvements? Land improvements are, for example, you purchase a land and you build fence around the land. Okay, of course, the fencing that you are doing around the land, its useful life is more than 1 year, so then we call this land improvement. So while land value does not go down, land does not depreciate, right? But the fencing that you build around the land depreciates, right? So that's why we segregate land from land improvements, like building. So land value appreciate, but building value depreciate. So building is, built on the land. So, right? So we have a separate item as a building and separate item as a land, right? Because building, when we use the building depreciate, wear and tear happen, right? So maintenance costs and all those stuff. So its value go down, but land values, it didn't go down, it goes up. Or if the value of the land goes down, we don't call it depreciation, we call this impairment. So we'll talk about at the end of this lecture how we are going to how we are going to treat the decrease in the value of land. So we'll talk about at the end of this lecture. But first, let's just talk about the plant assets. I hope you understand what does the plant asset means. Plant assets are categorized as land, building, machinery, equipment, furniture and fixtures, land improvement. What do we mean by fixtures? Like projectors, LCD installed in the office or in cafeteria or whatsoever, right? Similarly, ACs, air cooling conditions, air purifiers. So these kind of stuff are called fixtures, right? Okay. So let's just talk about the working rule is for the measurement of the cost of an asset. So the cost of an asset is the sum of all the costs incurred to bring that asset into its intended use. For example, we purchased AC and we pay, for example, $200 for AC. And then we paid the delivery fees of $20 to the postage services so that AC can be delivered to us. And then we pay $100 to the worker who installed the AC in its working use. So what is the cost of the AC? It's not about the 200. The cost of the AC is not about the 200. Cost of the AC is 200 plus 20 plus 100. It is 320. So the asset that came to us and we incurred some expenses to make it as intended use. So now we are about to use that. If even, we incurred $100 and what happened? It's still not working. And then we call the guy again and he said, okay, there is one wire which is damaged and you spend $10 to purchase and replace that wire or some tubes or whatsoever. So now the cost would be 330, not the 320. Okay, but when it is used, like after 3 days or 4 days of use, due to this electrical disruption, the switch, it's damaged, and then you replace that switch, then that is not the cost, because you were using that one and then it got some damages. So that would be our expense, and that expense will go to income statement. So all these expenses, freight, labor charges for installation, we call that cost. We add it into the cost, right? So like if you have a purchase price, taxes, commission, another thing that you are paying, that would be added into the cost. So if you want to find out the cost of the land, what's going on? So the cost of the land would be, wait a second, purchase price, that you purchase the land, right? Any commission that you paid for the property agent, survey fees. Okay, you pay a service fee to a company who surveyed for you and resulted, okay, so this is the area where, if you want to build a factory, so this is a suitable area, so you have to pay the survey fees. So that is survey fees also included in the cost of the land. Legal fees, right, for transferring charges, taxes paid to the property taxes paid to the government, would also be included in the cost of land. And any expenditure for grading and cleaning or removing the unwanted buildings. So if you purchase a land and there was like some hut, or if there was like many small, plants and unwanted trees over there, so you've cut those trees and all the stuff, you make that land for the use. So that is called expenditure for grading and cleaning and removing the unwanted. So that cost also be included in the cost of the land. Or in some hilly areas, the land is not smooth, so there are some, like, ups and down, the surface is not smooth, so you hire a crane or something, who just level up the place. That cost also be included in the cost of the land. Okay, so if you understand the cost of the land, so please, here we are, further understanding what is the cost of the land. So illustration is, the FedEx signs a $300 notes payable to purchase 20 acres of land for a new shipping site. So FedEx also pays 10,000 for real estate commission, 8,000 of the back property taxes, 5,000 for removal of old building, 1,000 survey fees, and 260,000 to pave the parking lot, all in cash. So here we go. So purchase price, real estate, back property taxes, survey fees, and you see the pavement, right, is not included in the cost of land. Why? Because pavement and fencing around the property, it is called land improvements, a separate head, not the cost of the land. Right, guys? So let me ask one by one. So Florian, Fabian, Lota, Kathleen, understand? Wusyong Nimes?
Makes sense.
Yes.
Good.
Yes, sir.
Good. Let's move forward. So now we know that, okay, this land cost us 360,000, right? Yeah, 324,000. So what will be the accounting entry? So it is like we purchased all in cash, right, the building. So the cost of the building include all these 5,000, 10,000, 8,000, 300,000, 1,000 surveys. So what is the cost of the land? We paid cash decrease. How much? 300 and 24,000. And land is our asset purchase, asset increase 340,000. So answer would be 324,000. Land to notes payable to cash, right? So now question is why we call this notes payable? Because this 300,000 FedEx, they purchase the land as on account or mean on credit only for this 300,000, right? And rest of the thing that on the top of that, this 10,000, 8,000, 5,000 and 1,000, he paid cash. So that's why 24,000 he paid in cash, and this notes payable he will pay later, so we create liability. If this notes payable was not here, so entry would be land to cash, simple. Understand, guys? Fabian, Wuxiang, Chloe, understand?
Yes.
Okay. So now the cost of machinery, building, equipment, similarly. So if you are constructing the building, so all those, commissions, architecture fees, legal fees, labor, overhead, and remember one thing, the interest. So you are constructing the building, you take a loan and you have to pay interest. So the loan that you have taken for construction of the building, so that interest that you pay while you are still in a process of completing the building, that interest would be added into the cost of building, right? Or if you are purchasing the already constructed building, then purchase price, of course, and then on the top of that, brokerage fee, sale taxes, repair and maintenance taxes for the first time of the use, when you enter that building and start using that for the first time. Until then, how much you have spent to acquire that building, that would be the cost of the building. And if you are constructing, so all the charges, map approval charges, construction charges, architectural fees, the design fees, right? Raw material payment and all, on the top of that, interest as well. If you are using your own money, then of course you are not paying interest, then this will be not included in the cost of construction. Otherwise, if you are taking loan to construct the building, that interest is also added into the cost of the building. So why we are discussing that? Because some businesses are in construction business. For example, they are building mega towers or skyscrapers, so they don't have this much $1 billion or $2 billion already in cash. So they normally ask bank to help them out, to give them some loans, so that when they construct the building and when they sell those buildings, then they will